Let's pull up the charts of Emami and see what that's doing. That came out with its numbers on Friday during market hours. As of now, yes, trying to make a recovery from the day's lowest point, almost flattish in trade as of now. That's Emami. But, we do have the management of Emami joining in with us right now. Mr. N.H. Bhansali, the CEO at the company, joining in with us to talk about their numbers. Very good afternoon to you, Mr. Bhansali. Thank you so much for joining in with us on ET Now. And Mr. Bhansali, what I want to know is obviously this time, when you look at the revenue growth, that was weakish because the winter portfolio, that didn't do well. Then that is Boro Plus, when you've seen 30% of your sales come in from Boro Plus side, right? So going forward, at least in Q4, what is it that one could expect in terms of revenue? Was this only a one-off in terms of because of the weak performance of winter portfolio that we're seeing such a subdued growth in terms of revenue?
Yeah, so for the quarter, it is not 30%. In fact, winter products contribute generally 65% for the quarter. And so the winter, this was the warmest winter. And on the top of it, the rural was continued. So inflation and rural offtakes also were weaker. So both taken together, despite these challenges, we could perform a positive growth with a 1.4% growth on revenues and EBITDA growth of double digit. So that's on a performance side, we are happy with the kind of performance which has been demonstrated. Going forward, we feel that with the onset of summer which is coming in, and we expect good growth to come in.
Okay. So good growth is expected going forward. Sir, also in terms of your volume growth, this time they've been a bit subdued. We're seeing a slight bit of a decline of almost 1%. Going forward, what is the volume growth that one should watch out for from the company in FY25? Any sort of number, should we expect low single digit volume growth going forward?
So very difficult to say it precisely because as we progress, see, interestingly, all our market shares are still intact. While revenue growth has not been in line with the expectation, but the market shares of all the brands, all the products are almost intact, and so we are hopeful, and the penetration level of all these brands are very low. So we expect a good growth with coupled with so many initiatives we have taken in terms of distribution improvement to right from branding. So many initiatives across D2C, the channel wise also. If you look at the D2C and online and e-commerce channels are also firing up. So all this taken together, we expect good growth and would definitely be a volume growth led by volume growth. But how much would it be? It will be difficult to predict.
Right. Also just in terms of then, what is it that you have in terms of a trajectory, that rural growth, how is that? Because that's been a bit subdued in the last year or so for all FMCG companies. We've not seen a recovery coming in. But, you have a lot of foot in terms of the rural side as well. What is the understanding you're getting from rural side? What is it that you're seeing in terms of trends for rural, in terms of demand as well?
Yeah, so the rural has still not started that kicking off, and so we expect the rural growth to initiate maybe from the first quarter or first half of the next year, next fiscal only, and that has to be led by, because there is a lot of optimism, many initiatives have been taken by the government, and on the top of it, the rainfall has also been good. Is expected to be good across. So we expect that all these things firing, rural growth has to resume from the first half of the next fiscal.
Right. Also, just in terms of, if we have to see that, is there a trend that we do know that there's a trend where local players are doing much better than, organized players? Local competition is gaining pace as well. So is that something that you're worried about? Is that still the case for the company as well?
Not really. In fact, if you look at the product portfolio of Emami, we are there for we provide the value for money products, and so we cater to the masses. So the masses are these products are affordable to the masses with many LUPs in the place. So that really is not a challenge. But as I said, so there has been a lot of downtrading, and the people are also looking for meeting their primary needs rather than looking into the discretionary products. So that has been a challenge. So once this economy starts looking up, and more particularly the rural, so it will have we expect a double impact to flow in from the next fiscal.
And sir, in terms of margins, we are seeing an expansion this time in terms of margins as well. So, what is the margin that you are seeing going forward? And obviously, if commodity costs keep coming down, is that something you're looking to pass on to the customers as well? Then.
So margins have really improved in the compared to the previous year. And so this has helped us improve on the EBITDA and the PAT by and double digit despite a very low single digit growth. So, but we feel that this margin would sustain because in the past periods, no, there had been a substantial increase as well. So we expect this kind of margins and this price levels to continue.
So let's talk about D2C business, right? That's been picking up pace as well. You managed to see a strong performance in both your D2C brands, whether you look at the Man Company or whether you look at Brill Care. Both of them seen a strong performance, and Man Company has actually managed to turn EBITDA positive as well. What's the trajectory now for Brill Care? What is the expectation in terms of break-even point for that?
So all these strategic investment companies where we have made investments, they are doing extremely good. And apart from this, we have also made investment in 2, 3 other brands, though we do not have a majority there. But all of them are firing up. In fact, they both, the Man Company, Briller, they both have demonstrated a good growth of about 75% during this quarter. And they are on aggressive growth path and also would be improving on the EBITDA. So there is a clarity on paths to profitability, and so the profitable growth is expected from these two brands, these two investments, and also from other brands as well going forward.
Okay, Mr. Bhansali, thank you so much for joining in with us this afternoon on ET Now. It's a pleasure having you on the show, and as well as understanding in terms of the company what we should to expect as well. That was the management of Emami Limited for y'all, keeping an eye out on Emami, doing quite well in terms of the D2C business. Obviously, margins have seen an expansion this time as well.